Here comes MACD. MACD looks like that. MACD line is a green line here. What's up, everyone? This is Dr. Tay from Quant. Welcome back to our algorithmic quant trading journey. We've covered a lot of ground so far, setting up our Python environment, handling financial data, understanding and implementing SMAs, performing basic backtesting, and even evaluating our strategy with key performance metrics. We have seen how SMAs are excellent for identifying trends. Today, we are going to introduce another incredibly popular and powerful indicator, MACD, Moving Average Convergence Divergence. While SMAs are primarily trend following indicators, MACD is momentum oscillator. It helps us understand the speed and strength of price changes, often signaling potential reversals or continuations before price fully reflects them. So, what is MACD? MACD was originally developed by Gerald Appel in late 1970s. It's so unique because it's essentially a MA, moving average of moving averages. It reveals the relationship between two exponential moving averages of securities, the stock's price. Basically, MACD consists of three main components. One is MACD line, number two, signal line, number three, MACD histogram. MACD line, this is the core of the indicator. It's calculated by subtracting longer period EMA, exponential MA, from the shorter period EMA. When the shorter EMA is above the longer EMA, the MACD line is positive, which indicating upward momentum. When the shorter EMA is below the longer EMA, MACD line is negative and indicating downward momentum. The second one, single line. This is default setup as a 9-period EMA of MACD line itself. It acts as a trigger for buy and sell signal. Number three, the histogram. This visually represents the difference between the MACD line and the signal line. The histogram bar expand as momentum strengthens in one direction and contract as momentum slows down or reverses. Positive, negative, you get the sign here. So you will get the signals from the MACD. Why is it useful? Definitely number one, trend confirmation. Number two, momentum changes, and you will recognize the divergence concept. So we can definitely visualize this MACD. This is also very famous. You can go to TradingView and your brokerage account or trading system platform. You can easily find the MACD. So let's get to it. I'm not gonna just read out all of these. Just get our hands dirty straightly. Okay, cool. So here's episode 7, intro to MACD. I wrote all the codes for you. Let's calculate the components of MACD step by step, okay? Remember, MACD uses exponential moving averages, which we briefly discussed in the context of their difference from SMA. It's exponential, basically. It gives more weight to recent prices. So pandas will work for you as well. To calculate EMA is easy with .EWM method. We'll get to that in a moment, okay? So let's start with Apple. Set up our data first. You get all the close prices here. Let's say EMA 12 days, EMA 26 days. You see the EWM method here. Span equal 12 days, 26, adjust false, and average, mean. So if you hit shift enter, you'll get the EMA calculated here. And then we will draw the MACD line, which is EMA 12 minus EMA 26. You get the MACD line's number. Calculate MACD histogram. Let's do this. Shift enter and yep, here's the MACD histogram lines. You drop if there is any null data, you gotta drop NA and you will get all the fully filled data. Now, the most interesting is to visualize how it looks like. I wrote all the codes for you. Basically, it will show you all the components of MACD. You don't really need to remember all of those. Just copy and paste my code and you will get it. You will get this. Yeah, okay, so the blue line is the close price. We're very familiar with this chart, right? This is Apple. And here comes MACD. MACD looks like that. MACD line is a green line here. The signal line is the red line here. It goes together and cross over again and again and again. From this point, you will see the momentums and you can catch where we can get in and enter. I hope you get this idea. So it moves along with the stock price changes here. So not only just looking at the moving averages, you gotta remember this MACD and catch the point where we can smoothly enter in and get some money in the market. So observe how the MACD line, the green line, and signal line, red line, move around the zero. This is the standard criteria, 0. Below 0, it's a negative. Above 0, it's a positive. It has a strong momentum. And it goes down here, right? Below 0 and then going up again. Going down and going up again. It's a wave, right? You see those random patterns here. But you got to look at the price chart and do your strategies and also add MACD to fully confirm the trend and momentum, okay? So bullish is positive, bearish is negative crossover. So I'm gonna give you another homework. Before that, we gotta test another stock. Well, let's do another McDonald's. Okay, MACD sounds like McDonald's. Let's change this to MCD and hit Shift Enters all the way through, and you will see this is a McDonald's chart, and the price is going up and down, up and down. So there was a deep maximum drawdown here on, I'm not sure, it's 2020. I think in March, it's right at the COVID-19 happened here, right? But if you bought here, the McDonald's, and you'll just strictly go up and up and up. And most of the time, it was on positive momentum, right? Not many chances giving you to buy, but you will get the fear of purchasing when the maximum drawdown is on the highest peak to here or somewhere like this and here. So today, we learned MACD, so powerful. If you have any questions, ran into any issues, please leave a comment below. Don't forget to like this video, subscribe to Quant channel, and hit the notification bell so you don't miss our next step. This is Dr. Tay from Quant. Peace.